first of all, I do already have a pre-built watch list of some popular names, and so typically I start things kind of like from Dow theory, where I'm kind of seeing where the index is. Are we bullish? Are we bearish? That's gonna sort out the bias of what sector I'm gonna look at. I'll look at what sector is most popular. So like right now, like what I think is big is robotics. So I'll make the whole watch list. I'll seek out all the robotics companies, create a watch list of them, and then I'll run through the charts pretty much on a daily or weekly basis. If I start to run out of setups, like I'll do my Sunday rundown. If I start to run out of setups, then I might spend an evening just running through the watch list and seeing if anything's appealing. But the other thing I do to generate ideas, besides just kind of like, on X, I've like heavily filtered who I follow, and there'll be some interesting names that come across like the feed. And I'll take a peek at them to see if I think they're interesting. But besides doing that, in the mornings I'll also run just this is probably the most basic screener in the world through TradingView. So the screener that I run every morning, which like pulled up HIMS and put SoFi on my watch after that post earnings run up, is I have the market cap over 2 billion, and then I'm looking for pre-market change over 5%. It does not get more basic than that. It filters out a lot of the noise, like penny stocks making crazy moves and stuff. I don't I don't care about those. Over 2 billion, or likely they're a highly valued growth company, or you're actually someone who's profitable, right? And then I'll kind of run these through like around like 7:30 to 8. I'll be running through some of these if they look interesting. So interesting off this list, and I will kind of be selective on what sectors I'm looking at too. If we get alignment with a sector that I'm also like bullish on, that I think is kind of quote unquote trending, then I'll play favoritism to that one as well. And then obviously, like we do when we're doing like the trade reviews and stuff, I'm watching the pre-market setups as well to see if we have some sort of like on HIMS this morning. There was attempts to try and take this off the double bottom divergence here. So like in the pre-market, I'm looking at this as a level where we have obviously this huge gap up. I'm seeing that it's running kind of hot and trending back down. And so I want to see if the RSI can fully reset. So here we have like the low here, and then the stock finds that bottom here. That's a really good level to try a long position. So long as the higher time frames are still good. So like the 65-minute on the open was still really good, came right back into support like that. So for me, I see that and I think, okay, this looks like a give and go from our playbook. So I see the RSIs kind of reset, becoming way oversold when the stock is clearly in an uptrend off the pre-market. So that's like a quick trade that I'll take in the pre-market. It did kind of stagnate without hitting the EMA. So we actually ended up just taking 20% on that, and it did end up stagnating for the rest of the day. But that honestly, with the way that this thing consolidated around this 35 level and even held it into the close, this is a position that you could have swung. You could have left it open. The preamp burn probably caught you, but this could easily come back. So for me, especially when it has, it's finishing the day at a 9 R-vol. So that's telling you that there's a really high relative volume, which is also a different way that you can kind of scan for names. Now, the new thing that I've been doing that people kind of requested that I kind of talk about is there's this new thing. So AI now remembers everything you've previously spoken with it about. So like I can open a brand new, can I share this? Let me just hide that. Our developer uses this like even more than I do, and I don't really want to give away his, he's got some sensitive information in some of those prompts, so I kind of want to hide that. But I could ask this anything, and it will remember what we've previously talked about. So what I've actually done is I've fed the AI my educational document for what makes for a catalyst. And then I've also fed it the information for how we grade setups, right? So oftentimes, one of the things that's really cool is then I can use AI to run a scan and say, hey, look through major market news and tell me if any stocks meet our catalysts. And it's on a point system. So I shouldn't have actually closed that catalyst list. But I'll say each catalyst or each, what would I call that? Archetype of a catalyst is 1 point. If a stock means multiple, there's multiple points. Show me stocks that have at least 3 points for catalyst drivers. And then I can also add technical parameters. So I actually was trying that out on the technical parameters. It's really buggy with TTM. So I tried to get it to register stocks with a positive TTM. It actually can fetch the real-time data. However, it has a lot of trouble. Like if you tell it to find stocks that are flipping to a positive TTM on the daily and the weekly, it'll start to really bug out, and it'll pull some bad names that are really close. So it still hallucinates a little bit, but it will still find some great names. So like that's what That's how I found actually ZS. This is something that would not normally be on my radar, but that one pulled up this weekend from the bot, and this has been obviously a really good trade. I don't think the real move has happened yet, but we've still been able to snag some really good returns from this because there's been a really big hike in the premiums. As the higher this goes, the higher the expectation is because it's kind of confirming the breakout. So you can make quite a bit on the premiums here, and so we're still waiting for this thing to actually even just like fill this like 7-point gap fill from 228 to 235. So there's still like a lot of room in this name, but that's a name that I normally wouldn't catch if I hadn't been using the GPT AI that way. And I'm just using the 4.0. I'm not using the more complex ones, but that's been something that's been really interesting to try out. It really puts a lot of different new names on my radar. And allows me to catch stuff that I normally wouldn't. Just like the scan tool also helps me since, a lot of if you've read through like my playbook of what I love to trade, I love those pre-market setups and taking quick trades in the morning, because I think there's a ton of edge to be found in like the first few minutes of the open, especially when ZS even today like had that huge opening drive and just snagging like a really quick profits off of that explosive move to the upside. It's stuff I love. Now that's not really the best example because we just happen to already be in positions and then we were able to catch some quick profits at the open there because there's not really a pre-market structure here, right? This is just kind of noise, but I can see that we did have extreme for this name at least, extreme high RVOL. So that tells me that a continuation is very likely for the next day. It's also why HIM still looks really good. And if you would have held the contracts that I actually took profits on, I don't think you did anything wrong. You just probably suffered some premium burn there. But if I can hold 35 tomorrow, it's a great play. But that's literally the most basic thing, is to hunt for new plays, have them on your radar. And for someone like me, I only want like 8 different things ever really on my plate. Really consolidate what I'm watching, because the more things you try to add to that, the more stuff you're just going to miss or mismanage. So, where lots of traders try to play the role of like large numbers, where they're trying to, especially people who track flow will have like 20 different plays on and they'll throw a trade at everything. For me, I really have a high win rate because I have like a really defined edge through my strategies. And so I'm not looking to take, 20 trades in a day. I'm looking to take like 20 trades over the course of the week. And I'm looking to win, anywhere between probably like 14 to 18 of them is like my ideal outcome. But hopefully, this is like kind of like a shorter class with like a very simplified process of just putting new names on your radar. And then, I guess I should go over like when I'm looking at technical setups, like let's say we're looking at something like VKTX. I'll start with the daily chart, maybe even the weekly chart. If it's a bit older for a stock like this, the weekly is kind of useless in my opinion. So I'll start from the daily. First thing I'm going to identify is key levels, prices, and memory. And buyers and sellers have the psychology of remembering how a stock reacted at particular prices, right? So when we reclaim like big psychological levels, or as some people might call them, support and resistance, or some people might call them liquidity, like all these people are talking about all the same things, right? So when I say I just do simple key levels, I'm basically taking those more complex concepts from people like ICT and stuff, and I'm taking it down to the simplest version of execution possible, and that removes as much error as possible. So a lot of people argue with me when I say ICT is like probably the dumbest trading strategy I've ever heard in my life, because it's so much unnecessary complexity that leads to more errors, that leads to lower win rates. And doing something like this, setting these basic key levels on a daily chart, and then just looking for key levels to be achieved. And then if you can get a catalyst to alignment, or you can get like the EMAs to align, it's beautiful to just look on the higher time frame and say, okay, we're breaking a major key level here. Maybe if I go to the 65 minute, I can find some other key levels on shorter time frames that might become apparent to me for more precise management of my position, and also execution of my option contracts. And then I'll work my way to the 15 minute, and I'll kind of shift between the 15 minute, 10 minute, and 1 minute to see what the TTM alignment looks like on the shorter time frame. And then of course I'm coming to my 1 minute, and then I'm looking at my pre-market setup, and once I've actually identified my key level on the higher time frames. So like that's how I kind of like work it out. Start on the high time frame chart, work my way down. This is kind of a bad example because there's no like obvious structure here. There is a nice rounding here, and I do believe the big thing for this stock is that we've actually finally crossed over the 50 EMA, which hasn't happened since like November of last year. So that's like a really bullish move that could be building here. We also have the daily firing to the upside, and I believe we almost have the alignment on the weekly. So a delayed alignment on the weekly should also give us a really nice move. Of course, at the end of the day, this is going to be in particular a more fundamental play. So recognize that when you're taking stocks, especially if you're playing in pharmaceuticals or biotechnology. You're looking for like key headline drivers. So, for a stock like this, use your Grok, use your GPT, go, or, do an old fashioned way, go to the actual investor page on the company website, Viking Therapeutics. Go look at the major announcements coming up, the trials coming up, and make sure that those are on your radar. Go through the trial data and stuff like that if you have the background. Now, for me, I love stocks like this because that is my background. I have multiple degrees in, biochemistry, biotechnology, and the sciences. So that's where I love hanging out in this space. I love doing the deep dives. But it's going to, understand that like this is a very fundamental trade where I'm looking for headline drivers, and when we're trading something like HIMSS, okay, we already have the news, we do have like a fundamental driver here, right? But this massive move to the upside, we're just in price discovery or rediscovery, you'd say. And so this is like pure just technicals now, just playing off the move that we got using the RSI divergence. So I kind of understand if what your catalysts are going to be and what the main drivers for the stock are going to be. For when it comes to like achieving targets and stuff. Like you can even see here on HIMSS, I did the same exact thing, right? Even though this stock is like kind of a mess to find key levels because it's literally just an upside down V. It's a TP basically, but they're still there, right? There's still points where we have multiple crosses, these big psychological points for the name. And we even got like a beautiful, like we came here, hit this key level, and then we had a beautiful consolidation back to this key level. So even holding that, about to flip on the daily here. And I believe the weekly actually didn't even recover into that move. That's actually shocking, especially with the huge volume pump that we got, that the momentum hasn't shifted here. But I still think this is going to be an interesting play, especially if the daily starts to move. It should get a nice big push. So, but that's a really short class. Can I get some ones in the chat if we learned something from this? Any big takeaways or any questions over anything that Abraham or I went over when it comes to like picking out new names? I see some ones in the chat. People are learning some things. That's great. But any questions, like this stuff isn't really the complex part. It's the execution, the repetition, the experience of actually taking those trades and identifying your edge. But it's still important to have, no matter how simple a process of like finding new names, because, you got to kill what you eat, right? So if there's nothing on your radar, especially on days like today, like a lot of people, like I was doing that live stream all day today on the X Spaces, and they were all complaining like, oh, market was sideways, couldn't find anything. And we made a good amount of money on VKTX today, playing this pretty great move. Like we got a whole 4 points to the upside. That was pretty fantastic. We made some money on ZS because this was the name that we had just been looking for the slow melt up on. So like the consistency in making profits every day, or at least having something on your plate. Same thing with yesterday. We ended up finding some good plays as well, while a lot of people were complaining that the index was just flat. They're still there, right? And even in this chop, like that was a beautiful touch at the orb where we went long. I would love to see more people in the futures chat with me because we've just been killing it. But this long off the orb and then re-achieve on this kind of support that we had, re-achieve that level, consolidate around it, and then a big opening drive off of it. So you could literally take the long off the lows here, and then you have another long entry right there that's just really good, and you don't have to sit around and wait to see if something happens at the close here, right? Like I don't want to trade that crap. And by the time we're here, I've already made my money. Like I was done trading futures even before we got that. I could have been done before I played this, but I ended up playing this because right when I came back from lunch, just was kind of testing the top of the orb. Nonetheless, I'm kind of rambling now, which means I'm probably running out of things to talk about and not giving a lot of value. So, Abraham, is there anything else you wanted to add? Any last comments or any touch points you wanted to hit on?
No, the only thing I would say is that we've now had, just like a broad market comment, is that we've now had several days of where, if you look back on the daily ranges, and this is manifesting in the VIX contracting, you're noticing now our daily ranges have come in like 2 or 3, 4x now. So we haven't seen a 100-point day in 3 or 4 days now. The VIX is kind of reflecting that, but the VIX is still really, really elevated. So that gives me a little bit of pause as far as the market's behaving one way, but the VIX really isn't confirming in the way that I would like to see them take the premium and volatility out of this market. So that's concerning for me, which leads me to believe that we're not done with the craziness.
Yeah, I think I wouldn't be surprised if the big tech earnings end up being kind of positive and we kind of get a gap fill here. Like I'm still looking to see if we can re-achieve this key level, and then I'll probably build up my shorts. I might take some pain and the entry of those shorts because there is a possibility we travel all the way to 6,000 before I think we actually find new lows in the year. So this is what I shared earlier today. This is kind of like my mapping for. I think we're actually going to close at pretty catastrophic lows at the end of the year. You know, I did a big write up yesterday on how Ray Dalio's article has literally touched on everything that I've been talking about for like a month and a half. About how the damage is already done. Even if the tariffs go away tomorrow, like there's no reversing the damage that's been done, especially when it comes to the restructuring of like basically the global world order and how trade operates, and how allies view trade with the U.S. Like we've disrupted a system that has existed for 60 years. So I think the market tried to price in with this huge dump how significant that was, but I don't think you can price in something that significant in a month. I don't think that's even doable because we haven't even seen all the ripple effects. Not even go read last week's newsletter. There's a bunch of other risk factors. 5-year corporate debt rolling over could cause a lot of what is already accelerating amount of bankruptcies to really start to pick up, especially coming into the second quarter. So that's kind of what I'm looking at for here is like maybe we'll get this pump basically into June. It could just be a quick pump through May if these earnings are good. Apple, which I think is obnoxiously bearish, says something like they've already made claims that they're going to rebuild all their production in India in 18 months. If that was like something I could bet on the markets wouldn't happen, I would take a large bet that that's not going to happen. It's going to take way longer than that, in my opinion. But that might be enough. Promises like that, hype like that, could easily carry the market higher. So that's something that I wouldn't be surprised if VIX meltdown gave a confirmation, but maybe didn't go below 20. Maybe came down to 20 and we got a nice pump and confirmation. But I do expect VIX to stay overall high. If it does melt to like 17 to this support, that's when I actually start saying, okay, I might start buying weekly VIX calls and just letting them burn until they hit. Especially when we get to like this range, that might be the best way to actually short it because you can buy with weekly VIX like super cheap. So maybe once we get over like 5,700, just start buying those and just looking for the play that prints 1,000%. When you're looking for a potential trade like that, you can literally fail 20 times in a row and still come out ahead overall, right? So just that thinking and bets mindset for when you're looking for opportunities like that, like on a macro framework. But there's a question here. It's not really relevant to the topic of the class, so I'm going to answer it. Jake said, in a crash, would you ever consider adding something like SPY to a long-term portfolio just to keep steady low risk profit? No. I would recommend that to someone though. Like if someone who didn't really follow the market, like if my brother-in-law came to me and he's like, Josh, you're a stock guy. The market crashed. What do I buy? Even though I know there's like a million better ways to make money, I'm going to tell him just buy the SPY because I don't want to text him every other day and be like, did you do X? Did you manage such and such? I'm just not going to remember that. So that would be the advice I give. That's not what I'm going to do though, right? I've beaten this SPY index for longer than I've even been a good trader with very minimal effort. So I have no reason to ever buy the index. I also wouldn't recommend SPY when the market crashes. So, I think 3 newsletters ago, go read up on that. But like, I guess I'll just cover it again because I really want to drive this home, for everyone because I just think everyone has short-term bias. But if we map IWM, small caps versus large caps on a monthly time frame, we can see that small caps always win, almost always win. For the last 2 decades and even longer if I had more data here. It's like for the last 40 years, small caps have outperformed large caps. And then if we go to the daily chart and we look at the short-term different gap here, large caps have greatly outperformed small caps. I think this is a blip and this is a bubble. And so what I'm looking to buy after the crash is actually small caps, not large caps. And I'm looking for this gap to literally get filled. Like literally 2026, 2027, and 2028 might be years where small caps outperform large caps by 30, 40% year over year. So like that might be a time where I buy that. But if you've been following the investment account, what I've actually been loading up at the lows is AVUV, which actually trends more in line with the large caps since I actually done a decent job of keeping up. It doesn't have anywhere near the gap of IWM. And that's because this is a semi-active ETF that tracks only profitable small cap companies. Do you think that allocating a 401k more heavily in small caps is a good idea? Yeah. Historically, if you have a longer time frame, we can just do a historical analysis, right? We just did it. Like everyone thinks the small caps have super high risk compared to large cap companies, but that's only if you're hunting for individual names, right? So like take any time frame, over every decade time frame, you finish with small caps ahead of large caps. And if you want to pull this data up on a longer time frame, you can do it, right? So everyone's got recency bias. A lot of people don't realize
small caps are also usually where more volatility lies. So if you're on the selling side, small caps are usually much better and cost effective to sell than your spies and your DAOs.
Yeah. People really don't like small caps because they develop a bad bias when it comes to like stock picking. Everyone, people lose a ton of money looking for like the next Amazon when they could have just bought Amazon, right? Um, but if you are looking for a, I would say overly diversified, but if you're looking for a diversified position with max exposure and like an index that's going to outperform or that's going to get the best performance, that's probably the way to phrase that. You want to be broadly in small caps, not large caps. Especially now. Like I wouldn't add the SPY, but I like AVUV, and I did buy it on the most recent dip, and I'm looking for another entry. I'm actually thinking about even selling some Tesla here soon, but I'll do a YouTube video about it, or I might even talk about it more in detail on Wednesday because I kind of want to break it down more in depthly. But we're kind of running over the time that I wanted for this class. I hope everyone enjoyed it. I recorded the whole thing, so I'm gonna stop that recording now, and I will.